In this video, I'm going to share with you how I set up my cryptocurrency portfolios as a full-time investor. I've been investing for over 15 years, from property to stocks, futures markets, and the last 5 years is in cryptocurrency. So I see a lot of confusion when it comes to the differences between portfolios. Some people only have one portfolio and others have a few setups. So that's what I'm going to share with you in today's video, and also give you tips and tricks from my experience in the cryptocurrency markets over the last 5 years to save you time and clear the confusion when it comes to organizing our portfolios to make the most out of these massive swings that we see in the market. Everything I reference in today's video will be linked in the description down below, and if you want to stay in contact, there's Twitter, Instagram, and of course make sure you subscribe and like the video if you find some value from it. Let's dive in. I've got everything laid out on this simple spreadsheet, and we're going to go through it cell by cell. Now I've got 4 portfolio types. Don't have to use all of them, but this is the way I like to structure them. And of course, there are a million different ways that you can do this, but for simplicity and how I actually use them so that I can speak to them and share them with you guys, this is the way I have used them in the past and how I currently use them. And I'll share with you at the end of the video how I structure it, how I set myself up, and which ones I prefer in what combination. So the headings that I've got here that we're going to explore today are the type of portfolio, the time frames that we're specifically looking at. That's important because a lot of videos that at least I produce, I look at short-term news analysis when it comes to the chart, but I also hold longer-term views for the market because I have a couple of long-term portfolios. So I'm looking at the market always in 2 different mindsets, short-term and long-term. I can see short-term lows and long-term lows as well. Types of crypto that I'm going to be trading or investing in the portfolio, percentage of the portfolio that I'll use in each of these types, storage, where I'll put the coins. Some of these might be a bit crazy to some people seeing it as an exchange, but we'll explain that in a second. Tax, because that usually comes up as well. People want to know what the hell you're doing when it comes to all of these different portfolios. So tax time, what I would do there. Trading alerts, because I need to be doing some trading. I'm short-term, long-term, notes, and then exchanges, which I'll go through on each of the different portfolios. So the first portfolio that I have here is my swing trading portfolio. This is the main one that I discuss with the members at the Investor Accelerator. You can find a link to that in the description. Essentially, this is my altcoin portfolio. This is what I use to get more Bitcoin, more Ethereum, more fiat, more stables, whatever it might be, for my longer term outlook. So I want to keep trading these things over to make more for my investments, my longer term investments. So you can see from the time frame, days, weeks, months. Sometimes these things pop off and I get a nice momentum swing into it. I'm not looking to dollar cost average down into these altcoins because I only want to be in these for as short as possible, as short a period of time as possible, and then get out, take those profits. Yes, I do sell these altcoins and then put them into longer term investments. I look at longer term stuff as Bitcoin, Ethereum, stable coins. I know they don't go up in value, but they do earn a very high interest rate compared to what I find in banks. So that's why I'm looking at those 3 as my longer term holds only. No Solanas, no Cardanos, no whatever the flavor of the month is at this point, because they haven't proven themselves yet through at least one cycle. Ethereum has done so. That's my reasoning for that, and I'll talk about that more on the channel as well. But this is just setting up the portfolio and giving you a slight background on each of those as well. Types of crypto, just altcoins in this one. I'm swing trading them. I just want to look at altcoins here. Percentage of the portfolio, it could be anywhere as low as a few percent. So roughly speaking, about 5 to 20%, because with these altcoins, I'm expecting to get several 100% return when I'm investing in them. So the portfolio could start out at 5% of my total portfolio amount, but then balloon out to maybe 20%, maybe 30% of my total net worth in cryptocurrency, because when these things take off, they really do skyrocket quite quickly and quite fast, or into greater masses compared to my longer term holds, which take a lot longer. Storage, I'm leaving them on the exchange. If they're there for months, then sure, I can take them off and put them into some cold storage. But if I'm swing trading them, I don't want to get hit with fees. I don't want to get hit with the timing of getting in and out of these cryptos. So I leave them on the exchange. As I said, this is just what I do. This might not be suitable to everyone else. And I know there is risks by leaving these cryptocurrencies on the exchange. However, I limit my risk in that regard because it is just a small percentage of my overall portfolio. If I lost everything on the exchange, I would be okay with that. I would hate it because it's part of my portfolio that I don't want to lose and I'm trading on them, but it's not going to destroy me because it's only approximately a few percent to approximately 20%. So it's not going to destroy me, and I can come back, live to fight another day, come through another bull market as well. So in terms of tax time, there's going to be several trades here. So I would use something simple like Coinly for my trade alerts to let me know when I want to buy and sell. TradingView. That's nice and simple. And if you follow me on the channel, you see that I set the alerts, and then when these go off, I get an email to my inbox, and then I can go and take that action on them as well. As I said earlier, the notes to understand when it comes to this sort of portfolio, there are a few different things, but the main things that come up, the questions that I get are usually fees, because you're going to have to trade in and out of the exchange if you're to set them up in cold storage. So withdrawing from those exchanges is going to cost you money. And if you're only trading with a small amount, then it might eat up all the profits that you're looking to make from these altcoins. Some people may only be putting in $50, $100. That's not up to me to judge how much you're putting in, but have to understand that the trading fees could eat up those profits, because sometimes it's $20 to remove them off exchanges, $30, $50. The timing as well, if I need to get in and out quickly, I don't want to be screwing around with outside wallets and getting in and out of the exchange to make my trades. I want to make my life as easy as possible when those alerts come up so that I can get in and out of those trades that I'm in. Exchanges, simple things I use for the Aussies. I got SwiftX. You can also use Independent Reserve, but SwiftX and CoinSpot seem to be the easiest because they have the most amount of cryptocurrencies if you're looking for an exchange in Australia. Also, you have Binance, Bybit. They do have spot trading. We're not talking about leverage trading at this point. Spot is just buying it one for one. We're not putting in any sort of 5x, 10x, 20x leverage. And Qcoin as well, because they do have a lot of altcoins over there, which you may not find initially on Binance. That's portfolio number one. It's probably the most time intensive because it is the shortest term timeframes, and it's generally only active or very active during bull markets, or very intense bull markets. We can use it, I do use it when it comes to bear markets, but they're not going to be as big a gains because the markets just don't move as hard when the market is down. Now, the second portfolio is my longer term portfolio, and this portfolio runs on months to years. Now, it's different to what you just saw there, which was a retirement, which we'll get into in a sec, but this one is where I'm taking my profits out of the swing trades, throwing them into my long-term portfolio. Types of crypto, I'm looking specifically Bitcoin, ETH, and we can also throw in stables here as well. The percentage of my portfolio, 80 to 100. Now, it's probably going to be more like 97 or 98, but just as a round number, 80 to 100%. Like at the moment, altcoins, I don't have too many of them because I saw them going down and I've been selling out of them in this period of the market. But you could watch this at any time and it might be different. I might have more altcoins in the portfolio because the market is going up and I see some momentum breakouts. So I'm going to say 80 to 100% here, generally speaking. And for some people, they might not want to trade altcoins at all. Keep it safe, Bitcoin, ETH, and some stables. As I said, this is just how I invest when I'm looking at cryptocurrencies. There is no right way. There's no one right way either. So mix and choose whatever works for you, and we'll get to that after I've gone through all the portfolios. Storage, cold wallet, staking. Now be careful with this. If this is your only bags of all investments that you've ever had and you're looking to stake them, pay attention to the security in where you are staking them. So maybe you do have them on a platform or something in DeFi. That doesn't mean that they are 100% safe, and you could lose all or some of your life savings that is in cryptocurrency. So the cold wallet generally doesn't get staking. There are options out there, but I think for a few percent, I would rather just keep this as my long-term bags because I see Bitcoin and ETH going up more than just a few percent a year. I don't need that extra few percent. I want the safety over the percentage interest rates. Tax time, super easy. There's not much trading that happens here. It essentially comes from the altcoin bag into the long term. There's no trading done. The taxes are paid once you have made the trade. They just go and sit in cold storage. That's it. Trade alerts from TradingView. If I want to sell something later on, the alerts are going to be in TradingView. My notes here, I'm going to set the targets for what I want this portfolio to be and then grow my portfolio. So if I want to have 10 Bitcoin over time, I have that set and then I just keep building towards that. I don't make this complicated at all. I just want to hit those targets and keep growing that initial base. The exchanges, Binance, SwiftX, and I've got here crypto.com because it depends what you feel is safe on those platforms. They do have insurance for something like crypto.com. SwiftX, at least that's in Australia, and then choose whichever exchange works for you around the world. Personally, I'd rather have it on a cold wallet, but if your long-term bag isn't huge, or to you isn't huge, then maybe you do want to keep it on some of these exchanges and earn a few % interest until it gets to a considerable size, which is in your plan, that you say, now's the time, it's going into cold storage, and that's it. Now, the third portfolio type is the retirement portfolio. Some might say, well, that's the same as the long-term, but the retirement portfolio, depending on which country you're in, for Australia, we use a self-managed super fund or an SMSF, or the US, you have your IRAs, Roth IRAs, those sort of things, where you can invest and trade tax-free or much less tax paid than you would with your swing trading portfolio, and then you don't want to have to just throw it into your long-term. So I can throw this into my SMSF and pay 10 to 15% on my trades that I do within that portfolio. Now, I still want to have it as a long-term portfolio, so I'm looking forward for years or decades for holding this Bitcoin or ETH, and probably some stable coins in there as well. This is just 100%. I'm not stuffing around with altcoins. That's just me. Other people might have a different view. Maybe they do want to screw around with their retirement funds. But for me, I'm playing it safe in cryptocurrency, which is already a little volatile compared to traditional markets. And I'm just playing it safe and throwing it into Bitcoin and ETH. Have it set up as an SMSF, and you want to know more about this, obviously I said there's some links in the description. I'll link some other videos down there as well that you can use. So I'm separating these when it comes to the percentage of the portfolio. Long-term and short-term swing trading, that's one portfolio divided into two, and I keep them separate on spreadsheets so I can see what's going on. As for my retirement fund, that's 100% on its own. Now I'm going to hold this in a cold wallet, or staking it on an exchange. That might be another option. But personally, I like the cold wallet. However, I do have a lot of it on the exchange at the moment because I'm looking to do some staking with it, but it is on an Australian exchange. So if something happens there, I know that it's insured on that exchange. I know it's not for everyone. It's just what I'm choosing to do. Now, in terms of taxes, easy because there's nothing happening in that portfolio on a day-to-day, month-to-month basis, besides if and when I get some staking rewards on there as well. So basically earning some interest. TradingView again for the alerts. It's a set and forget plan. I'm going to plan this earlier, set and forget it. And then every year I'm going to throw more money into my self-managed super fund based on what I am allowed to put in per annum, which is pretty much set by the government, and my accountant lets me know what I need to do there. In terms of exchanges, Binance, SwiftX, US guys, you might want to use iTrust. You can do it all in the one place. Last but not least, there is the short-term leverage trading. So this is your portfolio 4. This is not the same as the swing trading portfolio, because in the swing trading portfolio, I'm only going spot trading long. Short-term leverage trading can go long and short, and it's looking at minutes, hours, days, nothing more than that, which is the way I look at it. As I said, everyone else has something different going on. Types of crypto, any crypto, including Bitcoin, because this is leverage trading. So anything and everything out there, as long as I have a plan to it, I use my stop losses, and I have profit taking before I get into the market, it's on. Any cryptocurrency. Percentage of my portfolio, I'd look at between 5 and 20%, and then take out profits regularly and throw them into a long-term portfolio. Remember, the end of the day here is basically just building up my gold. My gold is Bitcoin and Ethereum, and then to have some stable coins on the side, so if I want to buy some other dips as well. The exchanges is where I would store this because it's trading. If it's locked up on the exchange while the trade is going on. I'm not transferring it to somewhere else. I just have a set amount on that exchange to trade with. Tax time, Coinly. There's going to be a lot of trades here. Coinly is going to be the easiest thing. Trading alerts set up in TradingView or on the exchange or any other place that makes sense for when I am trading. If it's on Bybit, maybe I have some alerts there. Maybe I have it in TradingView. It just depends on whichever exchange I can be trading on there. Fees, transaction timing, same with the swing trading. The notes here are I'm not trading it off exchanges, and I want to make it as quick and as easy as possible because these trades need to be in and out. And as for the exchanges, I'm using Bybit here. OKX is also good, and FTX, low fees over there as well, and super clean and easy to use. Now, I left that one till last because I am not currently short-term leverage trading. In the past, I had short-term leverage traded on CFDs, which is in your stocks and futures markets, and that's essentially the same setup there. However, I will leave a video to Bybit if you're interested. That one will be in the description, as my brother, who also has a YouTube channel, trades short-term leverage trading on Bybit. And finally, my notes for each of these different categories. In terms of the type of portfolio that we were looking at, we had 4 different portfolios: swing trading, long-term, retirement, and leverage trading. For me, any combination. So this is the variable that you'll have to put into your own portfolios or your own business investment plan. Choose the combination that you want. Maybe you just want long-term. Maybe you want long-term and retirement. Maybe you want leveraged as well. For me, I use the first 3 and I don't use leveraged at this point in time. Time frame, up to me. Long-term, short-term, and it's going to depend on the portfolio as well. Maybe my swing trading is going to be weeks and months only, and I'm not going to look at daily swing trading or hourly swing trading. So that's what this is about when it comes to the preference for the time frame. That's important to note as well, because there's content on YouTube which looks at long-term and short-term. I do a lot of that. And when I'm talking about different lows, it does mean long or short term. That's what I'm specifically looking for, because we can see short-term lows start to form, and then from the short term, they have to build into medium term and then long-term lows. It doesn't just happen that there's a long-term low that's been put into place. You can have an inkling that this is going to be a pretty strong low and could be the final low, but you never know until after the fact. So it's important to understand the time frame that you're trading when it comes to your portfolio. Types of crypto, again, my preference, I've given you an idea of which cryptos I would trade in which portfolios and why. Percentage of a portfolio, again, any combination. I've given you my combination of what I'm comfortable with because I marry up what time frames I'm looking at, how much time I have to commit to each of these portfolios, and that then gives me the combination that suits my lifestyle. Storage, giving you my thoughts here: exchanges and wallets. So they're the variables that you have to consider when setting up your portfolios. Tax time, I've given you the links in the description. Trading alerts, links are in the description as well. Easiest thing to do, like you've seen on the channel. I use TradingView, set those alerts. Emails come through when the alert goes off. That gives me a few moments I can get onto the laptop and start to make the trades when I need to, or just reset the alerts for another point that I'm more interested in buying or selling. Under notes, we've covered a few different strategies, whether I'm holding on exchanges or cold wallets based on certain things like fees for the transactions, and then also timing and how quick I need to transfer crypto from one wallet to another in order to get the job done. And finally, the exchanges. I've chosen these based on user experience, user interface. Those things need to be nice too, and I'm happy to pay a tiny bit more, a fraction more in fees if the experience is nice, because that allows me to act quicker when it comes to my trades, and I can make money that way. I don't focus solely on just the fees alone. Safety is obviously important if I need to leave my crypto on the exchange for those shorter term trades as well. Laying everything out like this in a table format really did allow me to choose my strategies and how I plan out my portfolio so that I can act quicker and save myself time when it comes to those critical decisions at the most extreme fear or extreme periods of the market. I hope that helps you too. Remember, the links are all in the description for everything I've talked about today. If you enjoy content like that, consider subscribing to the channel for more on cryptocurrency and economic market cycles. Thanks again for liking the video. See you guys at the next one. Until then, have more fun to get more done.